Understanding the basics. What is a mortgage? Buying a home is a big step. It's a dream for many, representing stability, investment, and a place to call your own. Most people need a mortgage to make it happen. A mortgage is a financial tool that helps you bridge the gap between your savings and the cost of the home. A mortgage is like a big loan specifically for a house. It allows you to buy a home without paying the full price up front. Think of it as partnering with a bank or lender. They provide the funds you need, and in return you agree to repay them over time with interest. They lend you most of the money to buy the house now. This means you can move into your new home sooner rather than later. You promise to pay it back over time, usually many years. Mortgages typically span 15 to 30 years, giving you ample time to repay the loan. This agreement, the promise and the terms, is the mortgage itself. It outlines the interest rate, repayment schedule, and other important details. It's a big commitment both for you and the lender. Both parties need to understand the terms and conditions clearly. That's why understanding mortgages is essential. Knowing the ins and outs can help you make informed decisions and avoid potential pitfalls. It's not just about getting the keys to your dream home. It's about securing a stable financial future and ensuring you can comfortably manage your payments. It's about making a smart financial decision for your future. By understanding your mortgage, you can choose the best option that fits your needs and budget. Getting your finances in order. Are you ready? It's a crucial step before making one of the biggest decisions of your life. Before you jump into house hunting, take a look at your finances. Understanding your financial situation is the foundation of a successful home purchase. Financial advisor. Lenders look at several factors to decide if you qualify for a mortgage and how much they'll lend. These factors include your income, debt levels, and overall financial health. One crucial factor is your credit score. It's like a report card for your financial health. A good credit score can open doors to better loan terms and interest rates. A higher credit score shows lenders you're responsible with borrowing and repaying. It reflects your ability to manage debt effectively. Next, figure out how much you can afford to borrow. This involves looking at your income, expenses, and how much you can comfortably pay each month. Don't forget about saving for a down payment. The larger your down payment, the better your loan terms can be. The more money you put down up front, the less you need to borrow, which can lead to lower monthly payments. This can make your financial life easier in the long run. Being financially prepared makes the mortgage process smoother and puts you in a stronger position. It can also give you peace of mind knowing you're making a sound financial decision. Exploring mortgage options, finding the right fit. When it comes to securing a mortgage, the choices can be overwhelming. It's essential to understand the different types available to find the one that best suits your needs. Not all mortgages are created equal. Each type has its unique features, benefits, and potential drawbacks. There are different types to suit various needs and financial situations. Whether you're a first-time homebuyer looking to invest in real estate or considering refinancing, there's a mortgage option tailored for you. One of the first decisions you'll face is choosing between a fixed-rate mortgage and an adjustable-rate mortgage. This choice can significantly impact your financial future. With a fixed-rate mortgage, your interest rate stays the same for the entire loan term. This means your monthly payments remain consistent, making it easier to budget and plan for the future. This provides predictability as your monthly payments remain consistent. It's an excellent option for those who prefer stability and want to avoid surprises in their monthly expenses. Real Estate Agent Media, a video featuring a financial advisor explaining the concept of adjustable rate mortgages with visuals of interest rate fluctuations and market conditions. On the other hand, an adjustable rate mortgage, or ARM, has an interest rate that can change over time. This type of mortgage can be more flexible, but also comes with certain risks. ARMs might start with a lower interest rate than fixed-rate mortgages, but can fluctuate based on market conditions. This means your monthly payments can increase or decrease, which can be beneficial or challenging depending on the market. Understanding the pros and cons of each type is crucial to selecting the best option for your circumstances. Take the time to research and consult with financial advisors to make an informed decision that aligns with your long-term goals and financial situation. Gathering your paperwork documents you'll need. Applying for a mortgage involves gathering a fair amount of paperwork. Lenders require these documents to verify your financial history and ability to repay the loan. Mortgage lender. Be prepared to provide proof of income, such as pay stubs or tax returns. You'll also need to gather bank statements, asset documentation, and employment history. Having all your financial ducks in a row makes the application process smoother. Consider creating a checklist to keep track of the required documents. Organizing your paperwork in advance saves you time and reduces stress during the application process. Section 5. Navigating the application process, finding a lender. Finding the right lender is crucial for a positive mortgage experience.
Shop around and compare interest rates, loan terms, and lender fees from different banks and mortgage companies. Don't be afraid to ask questions and negotiate for the best deal.
Once you've chosen a lender, you'll complete a formal application. This application gathers detailed information about your financial situation, employment history, and the property you're looking to purchase.
Providing accurate and complete information on your application is essential for a smooth and efficient approval process.
Section 6. Behind-the-scenes processing and underwriting. After you submit your mortgage application, it goes through a process called underwriting.
During this stage, the lender verifies all the information you provided and assesses your credit worthiness. They'll review your credit report, income, employment history, and other financial documents to determine the level of risk involved in lending to you.
The underwriter's job is to ensure you meet the lender's requirements and can manage the loan payments.
The underwriting process can take some time, so be patient and responsive to any requests for additional information from your lender.
Section 7. Sealing the deal, the closing process explained. Congratulations, once your loan is approved, it's time for the closing. This is the final step where you sign all the necessary paperwork and officially become a homeowner.
Before closing, you'll receive a closing disclosure from your lender. This document outlines all the loan terms, including the interest rate, monthly payments, and closing costs. It's essential to review this document carefully and ask your lender any questions you may have.
Closing costs can include fees for appraisal, title insurance, and other services. Be prepared to bring a cashier's check or wire transfer to cover these costs. Section 8. Life with a mortgage, managing your loan. Once you've closed on your mortgage, you'll need to manage your loan responsibly. This includes making on-time payments each month and understanding the terms of your mortgage agreement.
Set up automatic payments through your bank to ensure you never miss a due date. Keep track of your mortgage statements and review them for accuracy.
As you build equity in your home, you might consider refinancing your mortgage in the future to secure a lower interest rate or shorten your loan term. Managing your mortgage effectively helps you build a solid credit history and achieve your long-term financial goals. Section 9. Avoiding common mistakes, tips for success. The mortgage process can be complex, and it's easy to make costly mistakes if you're not careful.
One common pitfall is not shopping around for different lenders. Don't settle for the first offer you receive. Compare rates and terms from multiple sources to find the best deal.
Another mistake is underestimating the true costs of homeownership. Remember to factor in property taxes, insurance, and potential maintenance expenses when creating your budget. Being aware of these common pitfalls helps you make informed decisions and navigate the mortgage process with confidence. Section 10. The big picture, financial health and home ownership. Owning a home is a significant financial milestone, and it's essential to approach it strategically.
Remember that a mortgage is a long-term commitment, and it's crucial to live within your means. Avoid overextending yourself financially to purchase a more expensive home than you can comfortably afford. Instead, focus on finding a property that meets your needs and fits within your budget.
By making sound financial decisions and managing your mortgage responsibly, you can enjoy the benefits of home ownership while building a secure financial future. Home ownership is a journey, and by staying informed and making smart choices, you can achieve your dreams while maintaining financial well-being. Section 11. Resources and next steps. Your mortgage journey. Navigating the world of mortgages can feel overwhelming, but there are resources available to help you along the way.
Websites like those of reputable banks and government agencies provide a wealth of information on mortgage products, the application process, and financial calculators. Consider consulting with a qualified mortgage professional who can answer your questions and guide you through the process.
Remember, knowledge is power, and by arming yourself with the right information, you can confidently embark on your journey to home ownership. Your dream home is within reach, and with careful planning and informed decision-making, you can make it a reality.